We are here to talk about Bitcoin and the promise and perils of cryptocurrency. If you've been following the news, there's been a lot of news about perils in the last couple of days. But the promise is also an important part of this conversation. And we have, again, just a terrific panel for you today. Immediately to my left is David Zell, who is a visiting fellow at FREOPP, but more importantly is the founder or co-founder of the Bitcoin Policy Institute, a new think tank focused exclusively on the public policy considerations related to Bitcoin specifically, not crypto as a whole, but Bitcoin specifically. To his left is Tuur Demeester, who's a thinker on Austrian economics and Bitcoin and crypto that I've admired for a long time. He's the founder of Adamant Research and a guy who, as you'll learn, has been a thought leader in this space for a long time. And then at the far left, appropriately or inappropriately, is Wallace DeWitt, an old friend of mine who used to be attorney at the Securities and Exchange Commission, focused on crypto, among other things, working for Michael Pivovar in the last administration, and is also an adjunct scholar at the Cato Institute, where he does work on digital assets. So thank you all for being here. Why don't I start with you, Tuur, just because you're a guy who's been an investor. If I recall correctly, it was the University of Chicago endowment. Is that what you were involved in? Where did you, when you did investing, tell us a little bit about your investment.
Oh, sure. Yeah, my background, I co-founded a little think tank back in Belgium, and then I was independent as an author of a financial newsletter. And then I did have a Bitcoin Alpha fund, and then wound that down, and now I'm mostly focused on research.
But you still follow the market, so I mean, among all of us here, you're the one who's probably the most useful to answer this question. Like, tell us about what's been happening not just in the last couple of days, but let's say since the Fed started tightening and all kinds of high-risk assets have been coming down. Tell us that story. What are you seeing out there? What's happening right now?
Yeah, I think that, in early 2017 is basically when the bull market really started for Bitcoin, and then in the wake of that, I was kind of overwhelmed seeing it, but like hundreds and hundreds of crypto projects were launched, many of whom were purporting to be better versions of Bitcoin and things like that. Mostly I would say opportunistically, and so then we had this big rally, the ICO boom, that kind of like topped at the end of 2017, and then we had a bit of a bear market. But I think a lot of the frothiness kept on simmering because there's just been easy money around. It's just been so easy everywhere. There was a lot of overlap between these crypto projects and like Silicon Valley type investment ideas. And in my view, like a bunch of it was quite utopian. I think a blockchain is basically the world's worst database because you're storing everything forever. So you got to have a really good idea about what data you're going to store in that blockchain, which I think in Bitcoin's case it makes a lot of sense. It's money, you need reliability. And then the market started picking up again after COVID broke out and everybody went online, and we had like another boom. And then basically we saw in the wake of 2017, like that's where a lot of people were alerted, like, oh, something's going on you can potentially make a lot of money. And so new firms were launched. And some of these firms kind of went from zero to, I'm not going to say multi-billion valuations, but like apparently 30 billion valuations of some of the firms that we saw, like FTX. And basically what they were doing was fractional reserve banking. They, it seems, we'll see the DOJ is getting involved, but that they were basically playing with customer funds, and now now they went bust. So it's basically a bad bank. And I think it's pointing out something really positive about the Bitcoin ecosystem is that we don't have a central bank. There is no bailouts. And so these people are just going to, unless somebody buys the company and tries to salvage it with their own money, it's basically going to be a bankruptcy situation, and the bad actors go away, and the good actors are rewarded for keeping the trust of their customers.
David, tell us a little bit, for the people who are crypto curious in this room and may not be as familiar with the technology or all the finer distinctions. What's the difference between Bitcoin and crypto?
Ooh, well, 34 minutes is not nearly enough.
Give us the elevator pitch version.
Yeah, so I guess to start, it's probably helpful to articulate what it is exactly that Bitcoin attempts to do. To Tuur's point, the kind of crypto mania starting around 2017 led to all sorts of like fantastical ideas about what we might be able to use a blockchain for. So there were, projects ranging from naive but maybe well-intentioned visions of the future, all the way to Dogecoin and these sort of blatant pump and dump scams. Bitcoin is at its core a sort of credibly neutral outside money that has a couple of unique properties that are worth noting. The first is that it is permissionless and censorship resistant. In other words, there's no central leadership, no CEO. If you have an internet connection, you can connect to the protocol and exchange value with anyone else anywhere in the world in a way that can't be censored, frozen, seized, using this currency that can't be stopped. There are some other things that make Bitcoin different, but with 10, 16,000 cryptocurrencies, you'll be able to find some similarities. At its core, Bitcoin is a censorship-resistant, synthetic commodity-based money that lets people exchange value without anyone being able to say no.
Wallace, the SEC, kind of interestingly, is being relatively aggressive in regulating crypto, but has stated, I don't remember if it was during your time at the SEC or before that, but it explicitly stated, Bitcoin is not a security.
Yeah, so as a securities lawyer, I'm technically outside my jurisdiction, even being on the panel. I should preface my remarks not to throw a lawyerly wet blanket, but I am in private practice. My views are my own, not my firm, not my clients, certainly not those of the median SEC staff member. The SEC has been very aggressive in general. Bitcoin intersects with the SEC still in a couple places. One, the Bitcoin ETF. Morass, which hasn't started. There's other questions of custody of Bitcoin that still come up. I am generally a critic of the SEC. I was when I was there. My bosses very much were. I think, however, my view is that the industry can be a bit flippant when it comes to the SEC. So my takeaway point I'd like people to think about is the SEC should, to borrow a phrase, be taken both literally and seriously when we consider what they say on this topic. They have a totally plausible case that crypto broadly is a security within the SEC's precedents. Judges are going to take that seriously, even in cases when the SEC rightfully loses, and they may rightfully lose. They often do. They lost 2 9-0 decisions written by Sotomayor when I was there, which is not something that happens to an agency every day. What I would say, so to steelman the SEC's position instead of straw manning it, here's the world that we saw in 2017 when I started in Commissioner Pivovar's office when he was acting chairman. Almost overnight, a new asset class emerges. It is now in the trillions of dollars of value. It's sloshing around across borders in private hands and retail hands all over the place. The people who come to explain this product to you are not from New York City. They're not from Washington. They fly into Dulles from far-flung places like Austin, Texas, with flip-flops and T-shirts on. They tell you about this great idea, Dogecoin, or we had a Ponzi coin at one point, which was a perfectly described white paper that describes a Ponzi scheme. The SEC didn't even go after them because it was fully disclosed. And they say, well, what are we supposed to do with this? Well, what they do is they go to their tool cabinet and they grab the precedents that they've had for 80 years. And the famous one, the Howey decision, which we could talk about if you want, has to do with orange groves in Florida in 1946. It seems ridiculous, right? But well, that's how the common law operates. That's a feature, not a bug, right? It applies to this. The Howey case about oranges applies to crypto just as well as the Fourth Amendment applies to infrared scanners for marijuana plants in a Scalia decision, famously, right? And so the SEC goes after this stuff where I think they've lost the plot. And we were talking about this a bit beforehand. The SEC is making policy too much by speechifying and sort of ex cathedra papal bulls, right? The case, what Avik's referring to now, the former lovely man, brilliant lawyer who was the head of corporation finance in the last administration, basically blessed Ethereum in a paragraph of a speech as a non-security and articulated something I think we probably all agree with about decentralization, but there's no standard. And I think the SEC probably needs guidance. That's my view, that Congress needs to act before they can do anything. But yeah, they've been very aggressive. They've been doing what we on the right call regulation by enforcement, which has its pros and its cons. But it's something that typically your conservatives at the SEC would generally disdain.
Have you taken a look at this Lummis-Gillibrand bill, which I think it's called the Responsible Financial Innovation Act, which is meant to create some of this clarity?
Yeah, I think there's a lot of ideas floating around. One, my colleague at Cato, Jennifer Schulp, who actually grew up in my hometown, she has some bill text on the Cato website that's very good. Hester Peirce, who's a dear friend, who's obviously the great, inimitable SEC commissioner, she also has sort of a sandbox theory that she's been kicking around. There is the Lummis-Gillibrand bill. That's bipartisan. It could happen. I think there's a general, the White House just did a framework a few weeks ago about this stuff. So yeah, I think there is some appreciation that something needs to be done. Some of the bills that float around simply say, we're going to punish the SEC and send it over to the CFTC. I'm not sure that would, that might not work. But yeah, that one seems like it could be a plausible way to start.
David, you mentioned that in your elevator pitch version of the description of Bitcoin, you emphasized the point about permissionlessness and censorship resistance. The fact that Bitcoin allows, I just came from the Hong Konger screening. In theory, if you have an internet connection, even in Hong Kong, where China is obviously keeping close tabs on you, I can send money to a dissident in Hong Kong, in theory, using Bitcoin that in a way that the Chinese government cannot stop unless they take away your internet connection. That's a pretty remarkable feature. But it's not the only feature of Bitcoin, and arguably not the feature that its creator was most oriented towards. It was more about his concern that in governments, governments have an incentive to massively expand the supply of money and drive inflation because that's how you finance deficits and debts. Can you talk about that piece?
Yeah. There's this great quote from Hayek, and I'm probably going to butcher it, but it's something to the effect of, the instability of and this is in his book, Denationalization of Money, and the quote is something to the effect of, the instability of the market economy is a sort of direct consequence of the exclusion of the most important regulator of the market mechanism, money, from itself being regulated by the market. And he kind of goes on and makes this really grand argument and says that persistent theft via inflation, that the sort of boom and busts of the business cycle, that all of these things that we find wrong with the modern economy can all be rooted back to the state's monopoly over the production of money. It's maybe a pretty radical argument. But a subset of that argument, I think, is really prescient, which is that monopolies have no incentive to innovate for the consumer. If you're the only game in town, why bother? And so I think one of the most interesting things about Bitcoin is that it is the first actual iteration of what Hayek conceived of as denationalized money. If you have a problem with monetary policy, rather than just going and tweeting about how you don't like the Fed, you can buy Bitcoin. And so yeah, Bitcoin has a sort of supply cap. There will never be more than 21 million Bitcoin. And it's incredibly difficult to change. So if you're someone who doesn't like monetary policy, believes that maybe you're a gold bug, you believe that there should be this stability in monetary policy, well, now you have the option to vote with your dollars or vote with your Bitcoin. And so yeah, I think even if Hayek's kind of terminal conclusion is a bit radical, I don't think it's that radical to believe that subjecting the government to market forces in the production of currency introduces a degree of accountability that didn't really exist prior. You don't have much recourse as an American if you disagree with the Fed. So yeah, I think Satoshi, the anonymous creator of Bitcoin, was not a fan of central banks, probably was a fan of Hayek. And yeah, it's one of the things that I find most cool about Bitcoin. It introduces this market competition to the production of money, and I think that will wind up being good for the consumer.
So, Tuur, the one thing a lot of Bitcoiners talk about is how, well, the reason why you should hold Bitcoin is because, say if you're an American, it doesn't have to be an American-centric story, but as an American, as your government runs $30 trillion in debt and prints money to pay for that, the value of your dollars are going to decline, but the values of your Bitcoin over the long term will only improve because the supply is fixed at 21 million. You can't increase the supply of Bitcoin. It's like real estate on waterfront real estate in Florida or something like that, maybe, or in Miami. So in that, is that really true? The pushback, the counter argument you'll hear from people is, well, if Bitcoin is a hedge against inflation, here we are right now, inflation is going up and Bitcoin is going down. So what's happening?
Yeah, what we've seen historically is that Bitcoin has been very responsive, actually, to monetary policy, but not CPI inflation, but actually the moments when there's actual increase in the money supply. If you look at M2, for example, and you kind of superimpose the Bitcoin rallies on top of that, interestingly, Bitcoin, so it kind of shows or illustrates the prescience of people who are involved in Bitcoin, that they're aware that usually CPI is much lagging the actual money printing. And I remember, I first learned about Bitcoin in 2011 in Argentina, and then my first Bitcoin conferences were 2012, 2013. And so 2013 was the Cyprus crisis, where for the first time, at least in my lifetime, we saw bail-ins being enforced, which basically means that instead of saving a bank from the outside by pumping money into it, you're going to just take a haircut off all the depositors' money and then give whatever's left to the people and save the bank in that way. And that actually was a driver of adoption, Bitcoin adoption. So I think on the one hand, it's yes, our money is diluting in value, and that is driving adoption. And of course, all the capital controls around the world. If you live in Turkey or in Ukraine, you have a huge incentive to have some of your net worth in Bitcoin because it gets you across the border. But so increase in monetary supply, but also this. Sorry, I lost my train of thought. This other side of the. I'm sorry.
That's all right.
Well,
We were talking. Yeah, go ahead.
I think I know where he was going to go
Yeah.
with this.
Sorry.
I think his point sort of underscores.
Sorry. I found it again. So basically, the idea that you are not dependent on a third party. You don't have to trust the Cyprus bank to hold your cash for you. That has been a big driver as well, and especially in terms of getting people into the mindset, as we're seeing more sovereign debt crises, more financial crises, especially now with all these shocks everywhere, it's definitely driving adoption.
Are there measures of the sophistication of the holders of Bitcoin around the world, or how liquid the market is compared? Because, does the efficient markets theory work in the Bitcoin markets the way we would expect in the stock market, for example? The stock market instantly reacts to any suggestion of a rate hike or a rate decline. It sounds like Bitcoin, they may do, but there's a bit of a lag there. How do you account for that?
Yeah, I would say Bitcoin works on two levels. There are Bitcoiners who are they've been through a couple cycles, they understand the drill, they're saving it for the long term. They're the hodlers. They're basically people that have their Bitcoin stashed away. It's maybe even for their kids' college funds or things like that. So they don't really move the market in the short run. They will put in the bottom, if we have now, right? Bitcoin is on sale, $16,000 Bitcoin. There are going to be people that are going to add to their position. And people, also there's the fundamental value investors like a Bill Miller or Druckenmiller. This is the time when they're buying more Bitcoin. But then on the other side, there's about, it's 1 million Bitcoin, something like that on exchanges. And so that is the thing that's hotly traded. And a lot of Wall Street people in Chicago, they will, for long periods of time, indeed, Bitcoin will correlate with, generally the markets and risk on assets. But then at some point you get the decoupling And it's extremely hard to time this. So I definitely don't recommend people try and try to time the decoupling and buy just before. It usually doesn't work. It's because it comes from fear usually, sometimes from greed. But I think this time around, next time it'll be a fear-driven rally that people are going to be like, okay, Bitcoin is my exit because maybe the house is on fire.
Yeah. Oh, do you mind if I?
Yeah, go ahead, Dave.
Yeah, I think the question of these are how sophisticated are Bitcoin investors. I think it's important to bifurcate those who are speculating on Bitcoin versus those who are buying it for practical purposes, which may seem a little strange to most of us in this room. Like, I spend all of my time advocating for Bitcoin, researching Bitcoin, and I use Apple Pay like for everything. It works really, really well. And so I think it is a lot of people in America, in Western democracies, look at this thing and they go, what is this for, right? Maybe I trade it with some leverage and try to make some money, but I don't need Bitcoin. And I think that's probably largely true for most people that live in like a G7 economy and live in a democracy. But when we sort of ask like how sophisticated are the investors, Bitcoin adoption per capita is highest in places that have weak rule of law, no respect for property rights, or rampant inflation. So for context, a little over half of the world lives in a state like the one I described, where owning private property is either impossible or spurious, where you don't have the ability to sort of own anything or participate in markets the same way that we do. A little over 1 billion people live in a country with double or triple digit inflation. And so, these places are where, and there's great research on this, these are the places where people are buying Bitcoin the most per capita. And there, it's not to speculate. It's because while we think Bitcoin is extremely volatile because it is relative to the dollar, there are literally 1 billion plus people for whom Bitcoin is less volatile than their native currency, than the thing that they actually have, that their government, their state gives them. So when we talk about Bitcoin adoption and sort of what the market is doing, it's important to remember this other side of the equation, which is often left out from the kind of wild price fluctuations, which is that there are kind of an increasing body of people who are buying this for explicitly practical purposes. They want to take capital out of a country with strict capital controls. They want to send a cross-border payment that isn't subject to outrageous fees from Western Union. The Human Rights Foundation has put out tons of reports on nonprofits in Belarus and Hong Kong and Nigeria who had their assets frozen by the state. And these people are not, hoping for the next cycle or hoping to pay for their kids' college in 20 years. They don't have any better option. And I think that is kind of the quiet trend of adoption that's underscoring this large, flashy speculation.
Yeah, it's an important point, David. That the one you highlighted in particular about over 1 billion people living in places with double or triple-digit inflation. I was talking to someone about Bitcoin from Turkey last week, and I was mentioning, how's it going with your 75% inflation? And he's like, well, that's the official government number, 75%. The actual inflation is more like 150%. And what he means by that is literally that the price of groceries is more than doubling every year, right? That's where Turkey is right now, which is a NATO ally, a pretty important country out there. So we have a tendency to think about this as as Americans, we tend to talk about Bitcoin from an Americentric point of view, but you look globally, it's a pretty significant set of applications that even with our relatively high inflation from our standards, it's a lot worse in other places. What about one thing I've written about, and I know that is often a conversation on this topic is, can Bitcoin eventually compete with the U.S. dollar or U.S. Treasury bonds as a global store of value? Right now, we talked about some of the earlier sessions how foreign governments, large financial institutions, they hold cash on their balance sheets in the form of Treasury bonds. Have they started allocating some of that to Bitcoin? Will they?
I absolutely believe they will. Yeah, because it's you can entirely control your keys in ways that were just unimaginable if you think about gold reserves, for example. I mean, we probably all know that a lot of the gold reserves when the war broke out in Europe in the 40s was shipped over to the UK and the US, and it never left. And then, some years ago, Germany was like, oh, we're going to repatriate our gold. And it took them like 7 years to repatriate. I think maybe not even half of the gold. So it's very, very cumbersome to store things like gold. And then, of course, what else are you going to do? You're going to buy equity, but then that's also depending on political relationships sometimes. Are they going to honor these contracts? It's securities contracts, basically. And commodities you can't really store. So Bitcoin is incredibly powerful because the way you can store it, you don't need to store it all in one place. You can have a setup where multiple signatures are needed to unlock these resources, and those can be stored in vastly geographically different places. So and then of course there's the scarcity aspect, and then on top of that there is the industrial aspect, because especially BRIC countries, also United States, have vast energy resources, and this is in a way you could see Bitcoin as a battery. Like Bitcoin mining is a way to charge a monetary battery that then later you can use at will, so that you're not beholden to have to sell energy abroad right now at the market price if that's not politically preferable or financially preferable for you right now. So it's a very, very powerful instrument to think about from a national strategy point of view or a reserve point of view. And yeah, I think even back in 2014, the Central Bank of Barbados put out a paper kind of like, oh, what would it, imagine if we would invest just 1% of our assets in Bitcoin, with some projections that actually were scarily accurate in terms of how the price would evolve and how that would change their independence. And of course, maybe later we can talk about it, but we already have a country in Latin America that is kind of on the Bitcoin standard, and the government already has some Bitcoins on their balance sheet.
They may have lost it all to
Oh,
FTX.
we'll see. I think that's actually unconfirmed rumor. I don't think it's confirmed.
Before we've mentioned the gyrations of the broader crypto market. We've talked about Bitcoin. There's one pretty important topic that is kind of in between those two, Wallace, that I want to pitch over to you, which is central bank digital currencies. Central bank digital currencies are effectively crypto versions of normal currencies like the U.S. dollar or the Chinese yuan, and China, in fact, has rolled out a version of a crypto version of the Chinese yuan called the ECNY. How do you look at digital dollars in general and CBDCs in particular?
So I'm not an expert in banking, although I do dabble a little bit. It strikes me that it's not a surprise that this is being innovated in China first, rather than here. This is me speaking as just a private citizen, not as a lawyer. I have an allergy to this idea. I don't like the privacy aspects of it. I like to hunt. I buy nice Beretta 28 gauge shotguns. I don't really need to have a permanent record of that on some government blockchain necessarily. I don't mean to sound like a lunatic here, but it is. I think that unlike the privacy aspect you're talking about, now there's a flip side to this, I will say, with a regulatory lawyer hat back on. Some of the discussion just now about the ability to evade, and that's the proper word for it, currency controls in various countries, is going to be problematical. Most countries view that as a clear-cut evasion and end around their law. They have those controls for a reason. And something tells me that governments are not going to so easily relinquish their power over fundamental tools like monetary policy to anonymous coins that, even from the AML perspective, I do a little bit of AML,
anti-money laundering.
From money laundering perspective, there are certain cryptocurrencies outside of Bitcoin that are sort of famous for their ability to facilitate money laundering. They're kind of like designed for heroin dealers. I think that it's an interesting topic. It reminds me of sort of the commanding heights lines from the Lenin and Hayek days, but I think there will be a fight over this at the highest parts of the economy. And I'd be surprised if small country NGOs were the winners of that fight. against central governments. Whatever my personal opinions might be, I think a CBDC is probably inevitable, right?
Go ahead, Dave.
Yeah, well, a couple of quick points. I do agree with you about the sort of Orwellian nature of CBDCs. I think it's worth noting that while much attention has been given by CBDC advocates to topics of financial inclusion and this sort of like people's ledger dialogue that's been going on, I've yet to hear anyone be able to clearly and concisely articulate the difference between like FedNow and a CBDC. And I do believe that the push for CBDCs has much more to do with some of the points that you got to in the back half of that comment, which is that I think people are worried about our maybe tenuous grip on the global financial system. I mean, the sort of post-Bretton Woods era has been characterized by a U.S. foreign policy that is like entirely dependent on our control over the rails of global finance, i.e. sanctions. And right now, the way that we enforce that control is sort of arm's length and rife with moral hazard. And so, I mean, you can basically, when you regulate like banks that are settling transactions, I think there are people who find the notion of a CBDC attractive because they envision other countries building their own CBDCs that are interoperable with ours, such that we can apply much more targeted and specific control over the flow of capital. So I do see the CBDC push largely as a maybe well-intentioned but misguided attempt to gain back some of that control over the monetary order, as we see on the other side countries building their own kind of global settlement rails, notably CIPS with China. And Tuur, you have something to say?
Yeah, just about the CBDCs. Back in 2019, I wrote a report called The Bitcoin Reformation, which draws some parallels between 500 years ago, the Reformation that happened in Europe, which was basically challenging the monopoly of the church, and we ended up with religious freedom as a result, especially, of course, in the New World. And so the way I see this CBDC phenomenon is very much as part of that playbook where initially you have a challenger to the monopoly, and then the monopolist, starts to react, and that's the counter-reformation. So that's how I see that.
So when a CBDC in the coffers clings, a spirit into heaven springs, or what's the line from Tetzel?
Yeah. So bottom line, CBDCs are a potential threat or to privacy, or in the case of China, an opportunity for a more powerful surveillance state that we could live without. I think that's the bottom line from you all. Let's talk about El Salvador. So El Salvador, a year and a half ago, it seems like it was 10 years ago, but it was really a year and a half ago that El Salvador announced at the annual Bitcoin conference that one of David's affiliated employers is involved in running. And the president of El Salvador announced that they were making Bitcoin legal tender, the first country to do so. Now there's actually 2 or 3, if I'm not mistaken, that have Bitcoin as legal tender. How is that experiment going?
Yeah, I'd say not all that great, to be completely honest. I'm sure if this recording gets published online, there will be Bitcoin lovers who yell at me on Twitter. I don't actually think it's gone all that well. I think there's sort of these small pockets of communities in El Salvador that have built some sort of circular economy using lightning payments, using Bitcoin. But the spirit of adoption in El Salvador doesn't really align with how I think about Bitcoin. One of Wallace's points from earlier, it's like, governments aren't going to be a huge fan of this. They're going to want to not let people just decide to move money wherever and whenever they want. With Bitcoin, that's incredibly difficult to do. You can sort of see on chain that someone has committed a crime, and you can use civil society, courts, law enforcement to go prosecute them. But if someone, like Tuur said, just has the private keys to their own Bitcoin, you can really only do something about that retroactively. Like the state has no capacity to bar me from sending anyone I want Bitcoin, unless we're custodying our Bitcoin with third-party exchanges. And the rollout of Bitcoin in El Salvador has been characterized by corporate intermediaries that are storing Bitcoin on behalf of citizens and then displaying a private spreadsheet that comes up in the UI of whatever Chivo wallet you're using that says you have like X amount of Bitcoin, which is kind of antithetical to the whole thing we were trying to innovate against, which was these sort of untrusted third parties. So I'm sure Tuur has thoughts, but honestly, I've been a little underwhelmed by adoption in El Salvador.
Yeah, I guess my take is just another milestone. Like early on, it was like, oh, no way any internet merchant would ever accept Bitcoin. And then like the first one did, and it was like everyone was excited. And then it kind of fizzled because like there wasn't really demand. And then no big corporation would ever have Bitcoin on their balance sheet. And then MicroStrategy bought $500 million worth of Bitcoin. And that was a big precedent. And so now we have a nation state that owns Bitcoin and that made it legal tender. And like, is it like, of course it's not gonna be whatever, like Switzerland is like very organized country who like knows exact, like no, I mean you're gonna have the risk takers that are first and they're kind of the mavericks and maybe the execution isn't great. But to me, the symbolic meaning of this is way, way bigger than the practical implementation. Plus, they did it kind of going into a bear market, so of course there's going to be a bit of like less excitement. So I think it's highly, highly meaningful. And looking back, like this is going to be remembered.
Analogy that just because of this conference we're having today that I think about is charter schools. One of the critiques you hear of charter schools, well, some of the charter schools go under, some of the charter schools fail. So let's just stop having charter schools because some of them fail. Well, no. I mean, the whole point is you do experiments, and then some of those experiments work and others fail, and eventually you get to a better system. Well, we got 3 minutes. Are there any questions that we can get to before we lock it down? I see a hand there, back there. Go ahead.
I was just curious. Any thoughts on like the FTX implosion over the past like couple days, just in general? It's a topical sort of thing.
Yeah, we alluded to it a little earlier, but go ahead. We didn't really
what the
dig into it.
long-term implications of it may be, and too, just in terms of FTX was sort of the one firm that seemed to be in good faith, sort of working toward regulatory compliance, and also with sort of Binance now sort of dominating that space now. How things may change, given that it's also a bit offshore and so forth.
Yeah, so this crisis, I think you could call it a panic, right? This panic started about 6 months ago in the summer, and a few weeks ago I drew, I guess back then, an analogy to me that makes sense is looking back at the panic of 1907, which was a big trust went under, and there was contagion on Wall Street, and then eventually. I think it was JP Morgan pulled together a few friends and they shored up some of the firms and stability returned. And interestingly, the market, if you look at the stock market back then, in 18 months the market was entirely recovered without any government intervention.
Yeah, but what happened 5 years later?
Well, so this is my point, right? Because I think that was the meaning of that crisis, or maybe the political climate was already ripe. But so indeed, 6 years later, the Federal Reserve was founded. And if you look at the Federal Reserve Act, on the very first page, they talk about the 1907 panic, right? So they refer back to that, like confidence was shaken and this and that. So I think the next few years are going to be extremely, extremely important when it comes to regulation of Bitcoin and crypto. And that's part of why I wanted to be here, because I think it's so important that we work to get an understanding of these things and to sort out like what is legitimate and what is valuable from what is maybe undesirable, and can we just stick with existing securities laws and anti-fraud laws that are just on the books in common law, or do we need a big pile of new regulation? Personally, I don't think so. I think we have a lot that we can just implement. But yeah, I think that's part of the big question mark for the next few years. I definitely would not want a central bank of Bitcoin to bail out a firm like FTX. I want them to go away. Let creative destruction rule.
That's a great point. And as you alluded to, David, I mean, that is one of the salutary things. In this whole market, there's been all this volatility. Everyone talks about it, but things have gone bankrupt. Things have crashed. and the world has gone on. There have been zero bailouts of Bitcoin crypto
And
ventures.
Bitcoin never skipped a beat. Like every 10 minutes, there's a new block. It's as reliable as ever as a network.
Yeah, amazing. Well, we are out of time. We could spend all day talking about this, and hopefully the next time we all get together, we'll have that opportunity. Thank you all for being here today.
Thank you.
Thank you, Avik.